president. Let's get this done, Atlanta. I'm a sad, that is too nasty. I'm big, but my bank account dead. She didn't get my name in their mouth, now they gag. It's a movie.
Really? Really? It is a movie. This is frustrating. This is the most heinous thing, right in your face thing. And I'm not gonna get into too deep into this because I know people have their opinions, but in my opinion, because this is my channel, and I'm gonna say what I feel, this is fucking disgusting. The fact that this is how they get the attention of black and brown, lower income, middle class, lower middle class people, and to get votes by bringing out celebrity dancers, artists, girls shaking ass, people actually out here cheering for this shit. Meanwhile, we're going to get into it in the show, the market is dropping and the rich are about to get richer while everybody is distracted by Megan out here shaking her ass, Quavo talking, all the black people stepping up for Kamala, and the big hype. There's money to be made. Don't be distracted by this bullshit. Let's get into the show. What's good? What's good? What it do? What it do? It's your boy, Train the Trader. It's August 7th, 9:50 p.m. Just want to do a video. I feel like what needs to be said is just breathe. Just breathe. The market is doing what the market is going to do. We've got Google getting hit with an antitrust lawsuit. We've got a 20% sell-off from the highs on the major indices, SPY, QQQ, IWM. Got a lot of big tech names selling off. There's a lot of fear mongering going on in the news. I mean, there's a lot going on right now. I hear a lot of panic. I hear a lot of fret. I hear a lot of people asking questions on, is this the beginning of a recession? Do I need to take profits? Do I add? All these things. So let's just get a general state of the market. Go through some charts. Understand what's going on. So we can relax. We can sit back, take a breath, consume the information that's being put in front of us, and learn how to take action. Let's go. Let's get it. First thing I want to do is pop over here to Yahoo Finance and show you guys some of the headlines. Nvidia stock tumbles despite bullish call. The AI trade is losing its luster as investors grow restless. Why mortgage rates should keep falling even before the Fed cuts. All these things. There's a lot of, is the U.S. currently in a recession? Jamie Dimon says, not at all. Stocks fade, resuming Wall Street downturn. So, a saying that I really like, I read this in a book. The time to buy is when the streets are full of blood. When the streets are bloody is the time to buy. So pay attention to what's going on. The market cannot always go in a up direction, but there's only three things the market can do: go up, go sideways, go down, and then repeat those things over and over and over again. So the sell-off that we saw, let's hop over here to these charts. The sell-off that we saw on SPY and QQQ starting last week, hopping over to the daily, it really started on July 17th is when the downturn started, which is crazy because the fear mongering and everything didn't really start until Friday, Thursday of last week when we had, I think that was this day. Was that the first? Whatever this day was right here, we got a huge bullish engulfing candle. And what is a bullish engulfing candle? A bullish engulfing candle. I'm sorry. Bearish engulfing candle is what this is. So when you have a candle high, low, the wick is just outside of this, but when you have a whole candle inside of the body of another, this bear candle right here is engulfing all of this bullish candle from the previous day. That is a huge bearish signal, especially coming down off of this high. We get a little pop, bearish engulfing, gap down here, gap down here. So we have, in between 2 days, 2 huge gaps down. There was a lot of panic in the market from this. We can see it in the Qs as well. So in case people don't know what the QQQ is, this is the NASDAQ ETF. And as I pull this down, you'll see it right here. Invesco QQQ Trust ETF. For the NASDAQ, the SPY is the S&P 500 ETF. So these are the, I guess you would call them lower priced ETFs for the bigger indexes and futures like NASDAQ, the S&P Russell 2000, which is IWM, iShares Russell 2000 ETF. So in all of these major futures and these ETFs, you can see the bearish trend happening. Let's go back to SPY real quick. Check this out. So they almost look identical. You get a gap down, you get a gap down on SPY. Go to the Qs. You see a gap down and a gap down on the same place, same days, same time periods, big gaps coming down from highs. So, is this time to panic? Is this time to panic sell? Is this time to be concerned with your funds and losing all your money? Well, if you bought at the top, yes. This will not be good for you. If you bought up here in this area, then what's happening right now is probably eating you alive. But if you've been paying attention to me, you know that you shouldn't be buying up here anyway. You should be buying down here, right? Down in these areas. So, doing the math on this, and we can do this real quick. Let me pull up a calculator here. We can quickly figure out what this percentage is or the range. So we know if we topped out right here at 503.52, 3.52, all I'm going to do is subtract 30% from that. And that's going to give us 352.46. So this is a 30 all the way down here at 352. This would be a 30% pullback down to this area. So as you can see, a 30% pullback, really 20. So let's go 20. Let's do 20. Because a 20% pullback from the highs is considered a legitimate correction in the market. All right, so let's do this again. 503.52 minus 20% is 402.81. So that's right about here in this area. So we haven't even reached a 20% pullback yet. So we're not in correction mode. I say all that to say this. You should not be panicked. This is a healthy pullback. And all the fear mongering that you're hearing in the news and the media outlets is designed to do that. They are trying to scare people out of taking advantage. That's exactly what the game is. They want people to panic because they see the market has been dropping for 2 weeks. Recession talks are coming in. The supposed experts are on TV and they're talking about how this is troubling times and blah, 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 blah. Am I saying that we are not going to go lower? No, I'm not saying that. I actually think that we are going to go lower because if you're paying attention, I say the 20% pullback is a correction. We haven't even reached 20% yet on QQQ or the SPY, the S&P 500. Okay? So this is necessary, especially when you zoom this out and we have been running up for months. We started at this low back over here in October of last year and have been in a straight bull market since then. So we get 2 weeks of a little bit sell off, people taking profits, Warren Buffett selling half of his Apple position. People see that as panic. The man's got so many shares of Apple, I'm not even going to get into that. But this is no time to panic. If you have a position, we can go to some other ticker symbols like NVIDIA. NVIDIA, if you have long-term equity in NVIDIA and you know that you're supposed to be buying at bottoms or on pullbacks, then why would we be scared and why would we be panicked right now? You shouldn't be. The only people that are the people that are inexperienced in the market and have no idea what's going on. So if I'm talking to my younger self, hell, if I'm talking to myself from 2 years ago, I could be seeing this and be like, dang, the market's going down. Maybe this isn't the time to get involved in the stock market. It's bearish. If you pay attention to the news, that's exactly what you're going to be thinking. Now, I find this interesting, too. On a side note, you have another very bullish or a bearish engulfing candle right here on the video. So we are getting signals that the market is taking a break, that it is pulling back, and is going to come back down to a level where the major investors in the whale money, the people that actually control the prices and the major moves in the market, are going to see this as at some point at a discounted rate, and they're going to start purchasing, which is going to push the price back higher. This is a normal thing in the activity of the stock market. Pullbacks are necessary. I'll give you two analogies. The market being a living, breathing organism just like you and I. If you were to go on a sprint for, let's just say, a 400, shout out to the Olympics, a 400-meter sprint. At the end of that sprint, what do you think your chest is going to feel like? What do you think your lungs are going to feel like? They're going to feel like they're going to explode, especially if you're not trained to sprint a 400-meter race. That just is what it is. You're going to be tired. You're going to be out of breath. Think of the stock market in the same way as you and I. We were sprinting, took a little break, sprinting some more. And we got to the point we got to maximum exhaustion. And now we got to take a break and take a rest. We gotta breathe. The stock market has to breathe. The point of and the way to play the stock market is to understand that when it takes these deep breaths, those are your times to strike, either adding to positions that you already own or starting positions on companies you've been looking at and getting your toe in the water. My other example, had to take a quick brain break, had a little brain freeze. All right. My other example is shopping. So people go out all the time shopping, buying new things, hitting the stores on the weekend. The malls are busy. You got people walking around, pockets full of money, cards that they maxed out on or getting ready to. People are shopping. Y'all get my point. But what are people looking for when they go shop? Normally, people are looking for discounts. So if you had a pair of shoes that you had your eye on for a year, that pair of shoes, the new LeBrons are $160, $180. So when they're first released, that $180, you might be like, that's kind of steep. I don't know if I want to spend $180 on a pair of shoes. So you go on about your life. You walk out of the store, go on about your life. A couple months go by, you end up back at the store on the weekend. You see those same LeBrons that were once 180 are now discounted down to $100. Now I'm gonna ask you guys straight up: would you see that as a discount? Would you see that as a bargain? Quite unequivocally, I think most people would say yes. One, you see value in them. If you like LeBron, if you're a fan of LeBron, or pick any other player or any other item of clothing, whatever it may be, if you see it's marked down 30, 40, 50%, most people are going to be like, man, this is a bargain. So why does the same thing not apply to stocks? Why is it that when the price goes down on stocks, people panic, but when the price goes down on that item that you want, those new shoes, those new clothes, that jewelry, whatever it may be, you see it as a discount and a bargain, and you easily swipe the card. You easily come out the pocket with the cash for the bargain. But why is it different in the stock market? Has anyone ever thought about that? If you're new to the market, what I'm saying could be complete Chinese. You might not understand what I'm saying, but follow me. Why don't people see it that way in the market? It's psychology, folks. It is psychology. People have a different type of attachment to money, especially towards things that they cannot tangibly touch. They can't see it. They can't feel it. I guess in the stock market, you can see it because you can see your profit and loss percentage going up and down. But any other time you see something that you like on a discount, you're so much more willing to purchase at that price. The same mentality has to be applied to the stock market. That's how you double and triple up your money. In recessions, that's where millionaires and billionaires are created, ladies and gentlemen. It is that simple. They do not panic. They do not fret. They don't trip. They buy the dip. That's the name of the game. You wait for companies that seem to be distressed, but you can easily go follow it up in their books and see that they're doing quite well. When you see those things at discount, ladies and gentlemen, that is when you are supposed to be starting positions, adding to positions, loading up if it gets to a certain level that you like. Take Google, for instance. Google is a great company. Had a great, let's see, let's check the earnings right here. Earnings report says that they are estimated 1.851, actual 1.89. So they actually beat their earnings estimate in this last earnings call or earnings release. And you see the price has dropped. If you caught the first part of this video, you might have heard me say something about Google getting caught with that antitrust lawsuit and losing. So they're about to have to pay out for that. My opinion, it's just a money grab for people, but it is what it is. It's part of business. The point I'm making is Google has been taking a dip, not only from the earnings, but from that news and the overall market. But yet YouTube is leading the world in streaming numbers. They are killing it in streaming. Google search is still the big dog. Has the story changed on the company? Shout out to Wall Street Trapper because I got this from him. Has the story of the company changed? No. Not yet, it hasn't. So therefore, this pullback on Google could be seen as a discount, just like you're shopping at the store. So are you panicked? Are you worried about it dropping? Or are you seeing this as an opportunity to add, to start, or to load up? This is why dry powder is so important right now. Ladies and gentlemen, if this is your first year in the market and you are new to it and seeing these things, this can be very intimidating. I'm talking from personal experience because I felt this 2 years ago when I first started. This is a normal part of the market cycle, especially this time of year. We're going to get a little taper, especially we've been off a bull run for months, if not over a year. It's time for the market to take a little break, but this is also the time that you need to be really paying attention and loading up on as much cash as you can, because an opportunity is coming for us to start, add, or load the boat on companies that are doing great things, because I guarantee you when this downturn is over, these companies will pop and probably go see all-time highs, break highs from previous periods, all that good stuff. And while you're sitting on the sideline scared, that was your opportunity to buy. And next you're going to be watching the market go back up, and you're going to be trying to buy at the top or at the last part of the rally when it's too late. That's how it works. Smart money buys on these dips. Dumb money buys at the tops or at the peaks, at these highs, and then watches all their money go red immediately. Know what side of the market you want to be on. You don't want to be on the losing side. You want to be on the winning side. So you buy low, you sell high. The time to buy is when the streets are full of blood. And we've been looking real red in the market lately. So take that, guys. This is not the time to panic. I think we're going to see a little bit more downside. If it does drop some more, great. Better buying opportunities, better places to add to those long-term names. IWM, look at this. Bearish engulfing. So we have a lot of signals that the market is going to downside. It's going to continue or just fluctuate. But don't be scared. Don't panic. Don't trip. Buy the dip. All right. Hope y'all got something out of this. All I got for y'all tonight. Running back if you need to. Remember, guys, like and subscribe. Help me grow this channel. I'm doing this to teach whoever I can. Also teach myself on this journey. There will be a time when I'm looking back at these videos like, man, I remember I had no views. I had no views and I was still spitting game. But I'm going to have this log for people to be able to reference so you know how to get the basics and where to start, the mentality you're supposed to have during all this. Stay focused on your goals. Stay focused on the long-term goals, what you want to accomplish. Get around people who understand what's going on, can explain things, can answer questions that may about things that may be confusing you. Get around people that are doing great things. Stay away from the pessimists in this type of market. The pessimists in this type of market will make you lose money because they're the ones that are going to be hating on the stock market, going to be talking bad about prices while I'm over here buying. And then in 6 months, when I'm up 20, 40, 50, 60% on my positions, they're going to be like, damn, I should have been adding when Train was talking about adding. That's how it works. That's how it works, ladies and gentlemen. All right, I'm going to get off my soapbox. Go enjoy the rest of my night. We back at it tomorrow morning. Train the Trader, I'm out.